when you've taken your profit off the top, like we talk about in Profit First for Lawyers, and you've only got what you've only got to cover expenses, it forces you to be more honest with yourself.
You're listening to the Profit First for Lawyers podcast, the official companion show to the book Profit First for Lawyers by RJon Robbins. Now, this podcast is for you if you want to bring home more profit while working fewer hours in the office, spending even more time with your loved ones, and turning your office into a lean, mean, profit-breathing machine. So if you're tired of working for your law firm instead of your law firm working for you, stay tuned for some really practical insights that will get you the results you've always wanted. It's time to put your BS aside for the next few minutes and put yourself, your family, your firm, and your profit first. Welcome back to another episode of the Profit First for Lawyers podcast. I'm your host, Karli, and today we are continuing our 7-part series on financial literacy with Part 5, How Profit First Actually Works. Now, if you missed any of the earlier episodes in the series, no worries. We have those linked in our show notes below. Go take a look. But just as a brief recap, in Part 1, we talked about the fact that you probably aren't actually bad with numbers. You may just need a better way to understand what your numbers are trying to tell you. In Part 2, we talked about the 7 stages of a law firm's growth. And in Part 3, we talked about total owner benefits and why your real compensation as a law firm owner is more than just one salary number. And in Part 4, we talked about normalized salary and why it matters when you're trying to understand how profitable your law firm really is. Now, today, we are getting into the actual Profit First model. This clip comes from the Profit First for Lawyers workshop that RJon led back in 2019, and it gives a really clear breakdown of the difference between the traditional accounting formula and the Profit First formula, and the benefits of taking your profit first. Now, just a quick bit of context before we play it. This conversation actually started when one of the workshop participants asked a question about businesses that become successful without ever going into debt. And then RJon gave a pretty expansive explanation about how to use debt as a ladder instead of a crutch. And then the workshop attendee's next question was about how profit first accounting principles can help with that. Now, I'm going to remove the section on using debt as a ladder instead of a crutch, just so this episode doesn't get too long. But if you do have interest in a separate episode about it, please do send me an email at podcast@profitfirstforlawyers.com with the subject line, Debt Ladder, and I promise I'll do it. Otherwise, let's stick with the Profit First math here. Let's roll the clip.
I'm liking this because, it's challenging and I can see definitely the benefits of going the other route. But can you correlate that back to the profit first mentality then? With the idea of setting aside money every month so that you can be your own banker, basically.
Does everyone understand that question? Yes. Has everyone read Profit First? Has anyone not read Profit First? You've not read Profit First. Okay, you should read Profit First. You can actually listen to the audio. It's even better. Please explain your question more clearly because I want to make sure everyone really, really gets this.
So, in essence, my understanding of profit first comes down to every time you put a deposit into the bank, you're going to predetermine what your profit is. So like when I do my deposit, I'll move 10% over. And out of that 10%, I'll move money to pay taxes. I'll put money into the firm's savings. And then I'll take some of that money and I'll put it into my distribution that I pay myself on a quarterly basis. And that ensures that the business has savings, that I'm actually taking a profit out of it, and that my taxes are covered before the business cannibalizes whatever's left in the operating account.
Does everyone understand this concept? All right, let me explain it a little bit differently and tell me if this still matches your understanding. Because what you said is correct. Income, all the sources of income your business generates, less expenses, all the expenses, you see what's left over, either a profit or a loss. We all understand this concept? Profit First advocates a different approach, which, by the way, is the same approach I've been using in my business since the beginning, which is income less a predetermined percentage of profit gives you whatever's left over for expenses. And if whatever is left over isn't enough to cover your expenses, then either increase the income or decrease your expenses. Does this make sense? Yes? So traditional is income minus expenses equals profit or loss. Profit first for lawyers, you got income less profit as a predetermined, preset percentage of income equals expenses. So I'll put numbers to it. I'm going to do two examples to illustrate the two different ends of the spectrum. Income, $100,000. Expenses, $75,000. Profit, how much? $25,000. Profit first for lawyers. Income, $100,000. Profit, preset, 25% of all income automatically goes to profit. Therefore, profit is how much? $25,000. How much is left over for expenses? $75,000. All is good in the world, yes? Here's where profit first gets really interesting. Traditional income, $200,000. You'll notice I'm just doubling the numbers. Same ratios, same percentages, just doubling the numbers just to make it more distinct, okay? Income, $200,000. Expenses, $250,000. Profit or loss, how much? Loss, $50,000. And RJon is a sad boy. Profit first for lawyers. Income, $200,000. Profit, 25%, pre-programmed automatic off the top. How much? $50,000. How much is left over for expenses? $150,000. And what if in traditional expenses were $250,000 and produced a loss of $50,000? In profit first for lawyers, income was the same $200,000. We took $50,000 off the top. That left only $150,000 left for expenses. Yeah? How do you reconcile the world of traditional, where you need $250,000 to cover expenses, versus the world of profit first for lawyers, where you figure out a way to get it done for only $150,000? How do you reconcile that? Well, I'll give you two major approaches. Major approach number one, which is what I recommend, is raise the income. Raise the income to $300,000. Now you take $75,000 of profit, and you've got how much left over? $225,000. So now you got to raise the income to $400,000, and you take 25%, which is how much? $100,000 of profit, which leaves you how much of it to cover expenses? $300,000, which is more than the $250,000 you need. So you keep raising the income and getting smarter and more economical about the expenses. Things like not pissing money away on accounts receivables. Things like not pissing money away on marketing that goes unmeasured and unmanaged. Things like not pissing money away on staff who are not held to standards. Things like not reinventing the wheel every single week, every single time you handle the same case that you've handled 100 times before. And so you got to throw a very expensive associate at it instead of letting a legal secretary do it, because you develop some processes and systems and procedures. So you get smarter about your follow-up. So you're not wasting all this money on marketing that you don't even do anything with. You get smarter and you learn how to be better at sales so you can make more money from your marketing and lower your cost of acquisition. Because if you only have $150,000, you find a way to get it done for only $150,000, don't you? If you've got $250,000 to spend, you don't have to do anything that makes you feel uncomfortable. I don't feel comfortable learning how to sell. I'll just piss money away on marketing. I'll just keep being very bad at marketing and very bad at sales and just keep spending more and more money on marketing and sales instead of learning how to sell and have no profit left over. I don't want to have an uncomfortable conversation with my staff about what useless, lazy assholes they are. I'll just keep paying them and paying them and paying them and have no profit left over. When you've taken your profit off the top, like we talk about in Profit First for Lawyers, and you've only got what you've only got to cover expenses, it forces you to be more honest with yourself. It forces you to grow up as a business owner and make better decisions. Yeah, it forces you out of your comfort zone, but it forces you out of your comfort zone for good. Does that reconcile your question? If it didn't, that's okay. Speak up.
So I'm assuming then, because then you're taking that profit and you're going to take it home. You're going to bank it home. And then basically, if you run into a bad month, if you have that line of credit or that protection debt, that's what you're going to use. You're not going to, you're going to leave a pre-funded account.
Absolutely not. That $25,000 or $50,000 of profit that I'm taking out of the business, I'm putting that away where the business can't get it.
That's not working capital.
I'm taking that money away. I'm taking the alcohol away from the alcoholic. Got it? This $250,000 of expenses in the traditional approach is essentially enabling the alcoholic to keep drinking so you don't have to have an intervention. Profit First is basically saying, let's take the alcohol away from the alcoholic and force the alcoholic to sober up and start making better business decisions.
Okay, so that ending was vehement. But this was a really important point. Profit First is not about leaving money in the business so the business can keep consuming it. It's about taking the profit out first, protecting it for you and your family, and then forcing the business to become more disciplined with what's left. This is not about cannibalizing your business. This is actually a really great thing for it. Now, I want to share a section directly from Profit First for Lawyers that brings this home. This is from Chapter 8, right near the end. Quote, "When you put profits first, you force creativity, ingenuity, and innovation into your business. We begin by deciding ahead of time what percentage of every dollar of revenue we're going to scoop off the top and protect for you and your family. And then we get busy finding ways to make the business meet your high standards of performance with what's left over. And this leverages the most valuable asset you have in your business, your creativity. And it works beautifully over and over again every time we implement it." End quote. Profit First does not remove responsibility from the business owner. It forces better decisions. It forces creativity. It takes away the crutch that allows a law firm owner to accept low standards within the various parts of their business. It forces the business to stop acting like every dollar that comes in is available to be spent at the business owner's expense. So how do you take action this week? Well, first, if you have not yet started implementing Profit First accounting in your law firm, what are you waiting for? That's actually not a rhetorical question this week. I really sincerely would like to know what's holding you back. I'm going to put a link in our show notes, and do let me know. And then I'll make sure that we record an episode to address your specific concern. Okay, but I digress. How do you take action this week? Look at your own law firm and ask yourself, if I protected my profit first, what would I have to stop tolerating in my business? Where is your profit going? And that's it. Just sit with that question. And again, if this episode made you want to hear more about using debt as a ladder instead of a crutch, send me an email at podcast@profitfirstforlawyers.com with the subject line debt ladder, and I'll make sure that happens. And that's what we've got for you today, folks. Now stay tuned next time as we continue our 7-part series on financial literacy with part 6, how to quit doing the jobs in your law firm that you hate without tanking your income. We'll see you there. Thank you for joining us on another episode of the Profit First for Lawyers podcast. If you're enjoying what you're hearing, tell a friend and buy your copy of the book at profitfirstforlawyers.com. Your future self will thank you for it, and we will see you next time.